Danish pension fund, academic pension to dump U.S. treasuries. Report.
Silver trades near all-time high amid geopolitical tensions, safe haven demand. U.S.-Europe trade tensions spook markets. U.S. stocks may come under pressure amid renewed trade war concerns.
BCA cautions against chasing silver prices higher. Here's why.
This is the scariest chart I've seen in years.
Gold climbs above $4,700 on geopolitical risks and trade war fears. Exclusive Congo offers manganese, copper, cobalt, and lithium assets to U.S. investors under Minerals Pact.
We'll start in 1 minute. All right, you guys alive? I got to get the chat open. Yeah, we'll kill that royalty-free music, YouTube. All right, let me... Oh, wait, it's running on Thursday, not today. Yeah, all right, well, let's stop this one, and then let's go over to the other room. Wrong room. Did I do that? Nah. My mistake. I'll just rename it Tuesday. Bummer. Well, then let me delete today's since we're doing last week's. Bummer. I'll rename it in a bit. So just stay where you are. I'm almost done. All right. So we'll move on.com. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. YouTube is glitching. Now it's telling me nobody's here. No, that it's not working. Unable to connect. Let me go over to here. Maybe it's a YouTube glitch today. Okay, I think I got you. Sorry. These things happen. Let's see. I'll say hi. Hi. Okay, that seems to be working. All right. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So, hola, Ohio. Another day in front of us. It's a Tuesday. Yesterday, the markets were closed. Yens are moving, dollars moving, Swissies moving. So it's quite a blessing. Few new features on TRADARS. We have spike alerts now. So what we do is we look at every data point on the calendar, and then we analyze meet, beat, or miss. Then we analyze, does the market move? So very similar to what we were doing before in that case, but then we break it down into actual result situations. So we create sort of like 3 different environments. How does UK CPI move the market on a meet? How does UK CPI move the market on a beat? How does UK CPI move the market on a miss? Do all those calculations, calculate all the implied volatility, convert that into pips for each scenario, and then show us the history, show us this, and show us that, and show us the charts, and make clear how you do these calculations. And then only alert me to what's important. And then we simplify it to look like this. Now, I think that chart should be a little taller so that it lowers this a little bit, but pretty good. We can make it a little bit better. But it's a very, 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 very smart, quote unquote, calendar if I were to dumb it down. Now, as you go through the platform and you're doing your analytical research, both fundamentally and technically, we pop up alerts just as a heads up to say, spike alert, UK CPI coming up in 1 minute. You'll actually hear something like that. Even though we're 16 hours away. You might be doing your research and you're not even paying attention to the clock. Well, you'll get a notification. And I'm thinking of even creating like a spike alert email service just to say, dude, there's some serious risk coming up in the market today or soon. And you might say, well, my calendar already tells me, this is a red one and this is a green one. And, this is important and this is, high, medium, low. Well, there's a lot of assumptions. I mean, it's 100% assumptions on those. So what they're saying is CPI important to economic analysis? Yeah. I wouldn't disagree with that. But our calendar uses millions of candlesticks going back through history in every scenario ever created by every single news event, does the calculations from all of them, and then based on unique situations of meet, miss, or beat, be able to calculate the risk or the opportunity of every one of those scenarios. And then plot that here. And we even take that one step further, so I'll show you a little bit later. We'll actually show you, like, for example, the estimated volatility for
Bitcoin technical analysis. Today, order flow. Intel spots. Bearish auction pause near 90.6K.
I don't like this, but what it's doing is it's looking at all three scenarios, and when you combine all three scenarios, what it's telling you is combined it's worth 18 pips, we'll call it. Okay. And well, that might be true, but that's impossible because you're not going to get a meet number, a beat number, and a miss number all at the same time. So I'm going to change this. And one of the things we are doing right now is going through history. So past performance does not predict future results, but we go through history. And now I know two things. I know I know which scenario moves the market the most, which is what I really care about. What's the opportunity and threat here? And the probability of that situation happening. So I already know if it comes out better than expected, I don't care about UK CPI based on historic implied volatility of how that scenario played out in the actual market. I don't care. I also don't care if it comes out as expected. So it's missing forecast. It's supposed to be printed. We have it. It's just not. So if it comes out as forecast, I also don't care. So then, Wayne, why is it flashing red?
Tech sector tumbles, navigating today's volatile market landscape.
All right, Nazi's down, huh? So anyway, so now I look at this and I'm like, why is it flashing red? And that's what it should be telling me. It's confusing. If it's no big deal, then why is it flashing red? Because it'll only flash red if it's important. So here's what's important, and I already know, and I'll show you that later. If the UK CPI is lower than expected, I know what happens to pound dollar. I know what direction, and I know how many pips. And it's a doozy. Okay? And I know the magnitude over 1 hour. So like, how about this? Let me just give you a scenario. What if you knew in this situation that the UK CPI is a miss tomorrow? It comes out lower than expected. I know, or I have data that shows past performance. It's not a prediction. It's just this is what's happened in that scenario. In 1 hour, pound dollar drops. Okay, it doesn't rise. And it drops 54 pips in that hour. Now you know there's a scalp opportunity only if there's a miss, and if it's miss, it's worth 50 pips. Is that a decent scalp? You're like, well, Wayne, how do you know that? How funny. This is supposed to link. All right. How do I know that? All right. Well, here's that next event. See, this is why I don't like this. If I knew it drops 50 pips on a miss, but then did nothing in the other two situations, well, then it's like, well, it's only worth 18. That's not true. It's worth 50 on a miss. That's what's true. So here's the data. The best thing to trade is CPI, because we've looked at multiple other assets. Best thing to trade for UK CPI is pound dollar. If it beats, it goes up 13 pips. If it meets, it goes up 4 pips. If it misses, it drops 45 pips. And on misses, it drops every time. However, you only miss it 21% of the time. There's a 21% chance of a miss, and if there is a miss, it's going to drop 45 pips. 43% chance it comes out as expected, nothing happens. 36% chance it comes out better than expected. Does 13 pips in an hour? Seriously? So now I know what matters. I only care about a miss. 21% probability of a miss, and if we catch it, it's worth 50 pips. And I can prove it. Here's a miss, that's pound dollar. Here's a miss, oh, that's a met. Here's a miss, there's pound dollar. Met, beat, beat, met, beat. Okay. So I'm going to go through and gather more and more data. The goal here is to have 3 years of data. I think we're actually doing it. Maybe we put it here. It's just too much data to have on this one sliding thing. But I think no, it's not going to display it. Good, because that's actually a lot. But it's in our calculations. So this goes back more than a year. And you can see the 2 situations out of 14 events, 21%. In those situations, every time pound dollar dropped. This one dropped 44 pips in the first hour. This one dropped 47 pips in the first hour. For an average of 45.1 pips down. Fair. So it's very specific. So you can see, like, I'd rather just know this, like, if it's a miss, totally worth your scalp. Or you better hedge. But if it comes out as expected, don't worry about it. No. Okay. And here's the history of the news event. And here's the miss that we had last month. Cool, right? And we have this for everything, for everything, for everything. Okay. So for US GDP, and by the way, this was just released over the weekend, so I have to go back and double and triple check everything that it's working. But based on its analysis, US GDP, trade gold, USD yen, Euro USD, and the S&P 500. This one's worth 50 pips. This one's worth 46 pips. Okay, but I think they're the average scenarios. So now you have to say which one. Okay, which one should you be trading? And I have to double check it's converting things properly, but okay. So anyways, it's in beta it shows you here, but it's pretty kick butt, huh? Yeah, it's got a lot of potential. Okay, let's burn through a bunch of charts. Okay, let's do dollar pairs first. Step 1. Okay, look at the denominator and then numerator, right? So we're looking at the US dollar. Dollar weak, dollar weak, dollar weak, dollar weak, dollar weak, dollar weak, dollar weak. Done. Dollar is weak. That's how to use this tool. Second thing is 3 time frames. Swing trade, day trade, scalp trade, right? 3 different tools. Long term, this is up. Here's the slope and the standard deviation. On the day trade, there's the slope and standard deviation. And then the scalp trade, very ultra short term, there's the slope and the standard deviation. Put them together, we're bullish on 3 time frames. 3, 2, 1. Okay, looks like a change in trend. Cool, that looks like a good opportunity. Look at this. What are you trying to do in an uptrend? Buy a dip. Oh, look, it's dipping. Are you going to buy it? Cool, awesome. Okay, nice. Looks like we can head up. Ooh, this one's messy. Kind of looks like dollar and yen are both weak. Skip it. Okay, USD CAD, I wouldn't buy that. USD Swiss franc, that looks like a sell, 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 not a buy, buy, buy. It's a sell, 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 or bankruptcy. You choose. All right, so that's the slow way of doing this. Let's do all the yen pairs now. Bullish, 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 neutral. Oh, well, we already figured that out. Okay, looks good. Okay, looks good. Okay, you can see that they have bottomed out from previous moves. Cool. And cool. This looks the best. It looks green across the screen. Swissy strong. Yen is weak. Get on it, son. Don't call me daughter. Yeah. Dude, this is killer, isn't it? Yeah. You're like, Wayne, that almost is like technical analysis. Yeah, it's a lot like technical analysis. We can do technical analysis, of course. So you want to trade Swissy pairs. And you want to buy Swiss franc, according to the research we just did. So do all my technical analysis for me. No! Yeah. No! What's going on? Price feed? All right, maybe it's just Swiss franc. All right, let's do the other thing. We also know the dollar's weak. There we go. Do our technical analysis for us. Now, he's actually doing more than technical analysis. Aiden is lending his bias over here. Aiden's bias, Aiden being our AI. It's 60% fundamental, 40% technical. Now, over here is 100% technical. Just so you can see. The chart's bullish and Aiden's bullish. Cool. Nice to know. What struggling? Anyways, Aiden is bullish on Aussie dollar fundamentally and technically. It's a bias, a dip scenario. Beautiful. Ride the moving averages. Look at, you can see best case, base case scenario. Base cases we get through the daily R3. So these are bigger than just scalps, guys. This is bigger than just a day trade. We can't even harness these wild horses. So why don't you move over to swing trading? Let's analyze everything from a different point of view. Okay? That's how you do it. So this is like, if this turns bullish, can it stay bullish for a while? Well, what's happening now is it's slightly bearish on this time frame. But we have a best case scenario here. And we have a worst case scenario here. Okay, this is all statistically done. We give you all the calculations. So it's not guesswork, it's statistically. And the way you do it is, let me do this in gray now. Raw. Okay, if we do this, this is this trend on the 4-hour chart. So the trend is not bullish, but it could turn bullish. The chart is bullish. 21's above the 55, and if you had a MACD, it would be above the water line and rising again. So we just got a MACD cross up. You're like, Wayne, I can't see a MACD. I know, but I taught Aiden how to trade, and well, he doesn't see it either. He doesn't have eyeballs. He doesn't see these moving averages. He just knows what the moving averages are, and he knows how to use them and all that kind of stuff. He also has seen that we're bullish and prices risen back above the moving averages. And even though we're looking at monthly pivots, as I show here, he also knows weekly pivots, which he has here as well. So there's a lot going on in the technical analysis engine. We also, as you see over here, see the COT report. We see seasonality. That goes into the fundamental bias. There's our projections, and then there's the overlaps. All of this points to the scenario of, if you're a bull, we're going up here. And technically, you can start to be a bull again if you want. It typically doesn't work in January, but that's what's happening. It is happening. It's unusual, but it is happening. Backed by what? A positive flow of capital out of dollar and into euro. Dude, you get all of that just by looking at this chart? Yeah, money went into euro. Green plus means up, euro dollar. It's unusual, but it's happening. And technically, it's just getting warmed up. Dude, that's cool, right? That's a lot of information at your fingertips from a swing trader's point of view. And of course, we have that for everything. This is even further out. As I'll show you. We're here. It's all squishy. You can't really see it. Okay. Do you know what's going on? Annual. These are monthly pivots, these little tiny things that you see there. It's monthly. It's just January. And I can't expand it. I'd like it. But the thing is, if you're going to be a bull on euro dollar the whole year, so maybe you love euro or maybe you hate the US dollar, you already have targets, projections. Your goal is to figure out the timing of tops. But we have all the data, and it's beautiful, right? So looking at the daily chart right now, yeah, up, but you're looking for a pullback long and gone, right? Yeah. Higher high, higher low, higher high, higher low. Cool, right? USD CAD is turning bearish, there's no doubt about. Kiwi dollar is turning bullish. Technically, they're nice, right? You're like, well, Wayne, you're looking at pound dollar and you have a fundamental bias set and you're analyzing technicals on multiple time frames with a trading style through the lens of a particular trading style, and you have price targets 11 months into the future. Yeah. That is correct. And it's basically a break-even month expected, but money definitely flowed into the Great British Pound this week, or at least not 4%, but the difference between money flow from dollar to pound was positive +4. The differential, the flow. So like pound could be +2, dollar could be -2, that would be your 4. Towards pound and away from dollar. Knowing what institutional investors are doing should support your confidence to get out of bed and do what needs to get done. It's pretty cool, right? Oh, Calvin, I saw what your comment there. Yeah. So, and I don't mean yeah, like it's I'm not important. What I mean is it's super important. But there's two parts to the problem. The first one has been fixed. Good. And I had to rebuild from scratch. Completely different code. Okay. And you're like, so now you can actually log in versus getting stuck in an infinite loop. Okay, but that's fixed, but there's no similar code. Completely recoded from scratch. So it works, and it's stable, and it's better. This is part of being in the startup growth phase, right? Well, I guess we're still startup phase, not quite growth. Now, the second part of what's happening now is a different problem than before. For many people, they just couldn't log in. They'd log in and get looped. So now you're logging in, you're like, well, I'm a paid member, but I'm getting a free account. Gotcha. It's a different problem from a different source. The source of the problem is different, and it's a different problem. And the good thing is it's been identified what that problem is, the second problem. I know what it is, where it is. I'm not sure why, but it's there. The issue is it was supposed to have been fixed yesterday. And so what I'm learning this morning from your feedback and from a few others is that it was not fixed. So I will continue fixing it, and I would assume that we get it fixed today. So I'm not going to spend a week trying to figure out why. I think I know why, what needs to be fixed. Okay? So the cavalry is on its way, man. But, all right, going back this, how's another way of looking at this position trading? Well, there's a lot of fundamentals going into this and lots of technicals going into this. And it's precisely how I've taught it. So it's not like, I don't know, like a generic, let's say you buy an EA for MT4 and it trades moving average crossover. Dude, this is 10 million times more complicated. There's a lot going into these simple looking charts. You're like, dude, they're so simple and they're so clear and easy to understand. I hope you're doing that. And like that is true because that is by design. But the level of technical analysis and mixed in with fundamentals, things like seasonality and macroeconomics and COT. So now we're doing seasonal, institutional flows and technical analysis. And not generic technical analysis, many calculations. So moving averages, pivot points on multiple time frames, oscillators, price action, standard deviation and linear regressions into linear projections modified by standard deviation. You're like, oh, like there is a, what's the French word for it? Shit ton? There's a shit ton of analysis going into this stuff. Meanwhile, what do we do? How do we use it? Buy a dip, buy a dip, buy a dip, sell a rip, done. Oh, well, buy a dip, sorry. Buy a dip, buy a dip, buy a dip, sell a rip, buy a dip, done. We can do crypto if you want. Okay? And you should also see when they contradict each other, meaning there are times when long-term long and short-term long don't agree, and it'll point all that. But anyway. And then you can filter further. So only Swissy pairs, only yen pairs. Okay. Look, buy a dip. Looks good, right? Look, buy a dip. Looks good, right? Buy a dip. Buy a dip and buy a dip. And we've known this for a long time. Okay. Swissy yen, for example, is tickling 200, but we should get way, way, way up here. I'll put the prices there. But anyways, look. You got to get to the point where you just have tons and tons of facts. Okay, the trick with technical analysis is multiple time frames. And then the other trick with technicals is you should be aligned with fundamentals. My book, Strategic and Tactical Forex Trading, is exactly this. The strategy is the fundamentals. The tactics are the technicals. So you need to know all this fundamental macroeconomic and comparative analysis data and sentiment data, knowing whether you should be owning something or selling something. And then from there, is it the right time to accumulate or not? So we answer all of that. And then you can go to your chart. But you already have this in mind, see? And you're like, oh. Yeah. So we could do this. I talked about this morning inside of traders.com. We talked about, different ways to put together a strategy. And what if you were this is my scalp. All right. What if you were a bull? You're either bullish on Aussie dollar or bearish on US dollar. I could create narrative for all of them, for both of them. No, you could be both, but that's not what I want to get to. My point is, should you be a bull or a bear? And then if you are a bull or a bear, how do you put together the trade, right? The trade plan. Well, if you do this combination of fundamentals and technical, you're a bull. If you're doing technical analysis, not only are you a bull, but you're bullish and aggressive. Oh, well, that's good to know. So let's say to make that one page I just showed you, there's dozens and dozens and dozens of calculations. What you care about is, oh, bullish. Cool. Charts are bullish too. On the 15-minute chart, bro, this is the daily. But I want you to have a daily point of view. Okay. Let's say like an hourly point of view and a 15-minute. So if your analysis is correct on the longer term, you think this. Okay, let me do it this way. Okay, that's called your bias. Is that going to happen? Nobody knows. But it's logical because we got to the conclusion of that happening through logic, not my opinion. Now, I can guess as to why the economic data, the seasonal data, the sentiment data, the fundamental data, and the statistical data of technical analysis, I can make a lot of different assumptions. But the thing is, what you should know is these are all variables that we've pulled directly from 15 different government agencies, as well as analyzing 20 years of history. Like, dude, it's overwhelming is all I'm trying to say. That it helps. It might, maybe gives you an edge to just know what, like, kind of what's normal. So let's say it works this year. It may not work. It may not work next year. Oh, we just know that there's statistical probabilities. It's like, you know, in blackjack, if you can count cards, you know the likelihood of the next card being an ace, depending on the data that you have, which means you've seen a couple other aces on. You know they're out there, so the next likelihood of one last one being in the deck is not probable. So you should make the appropriate decision. But it could be there. We just know it's very unlikely. But it could be. Very unlikely. Could be. Very unlikely. Could be. So we want to have the trade the probabilities as much, play the game. We're trying to avoid risk. Okay. So anyways, we've made a decision on Aussie. So what do we do now at the open? Well, some technical analysis says, well, we have a floor. Cool. Let's go to a higher time frame. Okay. Cool. Now, this 55, let me remove that because that's a predictive number, not the actual. So, indicator. Okay. I'm predicting in the future where the 21 EMA is going to be. It's cheating. But here it is. So now on this time frame, we just bounced off the 21 EMA and have a price action role reversal. How does that make you feel? That makes me feel real good. That's why I would have dropped into the 15 and say, hey, 15, are you giving me any opportunity? Right? So you see this first, and then you go to the 15. Or shoot, you can go to the 5. Okay, where on the 5 do you see your opportunity? You might have seen it. Okay, you might have bought this dip, put a stop below the lowest low, and you're just working it out. But that's clear as day, isn't it? Yeah. Another way of doing it is, when is a good time to trade? Do you guys know what time of day it's good to trade? I can tell you, okay, this is a good time, not because of the price, because of the clock. Oops. Okay, so this is a good time, and this is a good time. We call this, using traders' nomenclature, London Open. What do we call this? New York Open. You're like, what? Really? That's it? Yeah. Many amateur traders, not only do they not know what they're doing, they're trading at the wrong time. There's no hope for a clueless amateur trader. No hope. Now, if you only placed your trades the time of day that was logical, that would help improve your trading a lot. And then if you had a strategy behind your trading, so you're not just trading like a chicken with its head cut off, making a bloody mess of everything. If you knew you were in the business of buying a dip because you can analyze not just, let's say, 12 hours ahead of time, but 12 days or 12 weeks, yeah, then you have some hope. Nice, isn't it? But the thing is, it's been clarified. I already have the projections way up here. So if you started the analysis with more clarity, it's probable that you'll make better decisions. I would assume. That doesn't sound dumb. So here's the trade plan for the week and into next week. Is that cheating, guys? We have a plan for this week and into next week with buy zones and take profit zones and nothing else. There's nothing else on that chart. There's nothing on that chart that says bear. Nothing on that Aussie dollar chart says bearish. We're looking at weekly pivots. We're looking at monthly pivots. We're doing standard deviation, linear projections. We are using moving averages, pivot points. We're using oscillators. And then to get to the bias, we're doing seasonality, chart analysis on 3 time frames. We're doing the commitment of traders report. We're doing comparative analysis between Australia and the United States. Did I say seasonality? Probably. There's dozens and dozens and dozens and dozens of things going on here. But for you, you're like, oh yeah, bullish. Sweet. Could be going up there. Right on. So get her done, son. Get her done. And then do like me. So I'm going to create a system here. When you open your Trader's Way account, I'll give you these templates. And then here's the super secret sauce. Sometime soon, I'm going to build a whole new charting system, integrating as much of TRADARS.com into it so that we can just go through like this Aussie dollar analysis that I just did for you. What if it was all here and actually not just drawing the charts, but doing all the fundamentals and technicals and seasonality and COT, and was explaining all these things all on your chart? I think that might be helpful. I'm going to try to do that and literally have our platform communicate, because what I'd like you to do is be able to take this, take this, take this, take this, take this, get in the dang trade, and let the winner run. And do everything based on logic and intelligence that can be proved analytically and have absolutely zero opinion. Has nothing to do with some stupid YouTube guru. Hey, it's pretty cool stuff, huh? Yeah. So anyways, that's what I think about Aussie dollar. And there's nothing that says maybe down. No. I have clarity on that. Okay. Look at this. Our projected high. Oh, what? Did you know that? Like, Wayne, I don't get it. What is that line? Okay. Back on the first day of January, my true love gave to me an Aussie yen aggressive target. Expect no more. I expect no more of 10. Is that an 8 or 6? Yeah, 106.82. And it's this number right there we had on this day. In fact, we had it over here. We were calculating over here. Hey, that's pretty lucky. You're like, well, Wayne, I missed it. Well, did you know TRADARS does pivot points in its analysis on 3 time frames all at once? So TRADARS doesn't miss it. Well, that's good. Yeah, of course it's good. But isn't that interesting? So the next thing is, then there was that total collapse. Yep. Total collapse. And I do believe a week ago we talked about this, and I did this. This is the buy zone. And of course, back then it would have been a little bit lower if you understand the math behind it. But let's just make it easy. Cool. So what is the February high? You know? Do you have February's target already done? You're like, Wayne, it's still the middle of January. Oh, dude, I'm well into February here. Currently, I think we're going to go to 107.5, probably higher, 108. Uh-huh. Yeah. Yep. Hey, that's good to know, isn't it? Yeah. What's the most potential? Okay. How does 118 sound? 1,111 pips from where we are right now. This is the thing that we're talking about in TRADARS this morning during my 2.5-hour training, is that you shouldn't just be waking up to these yens now. Like, really? You know what this is last year? First of all, that's support. That's the first level of support. That's S1. Okay, second thing is that's the collapse. Remember? I was on a beach in the Caribbean. Hasn't looked back. This was Liberation Day for tariffs, and this was my Liberation Day for trading. And so look at this. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. 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 And now we're up here, and you should not just be discovering. This is April 25. Cool. The other thing you should know is things like seasonality. Did you know that, I think right here, that time frame right there, what I tell people is that I'm waiting the whole month of September to buy a dip. And it's usually around, it could, it could be the third week of August, which is here, by the way, or by the end of September. I've been doing this forever, since caveman days. Okay? From the third week of August to the third week of September. I buy the end pair. Can anybody confirm this to be true? That you know this to be the truth? Anybody? Bueller? So I'll reiterate that just waking up to yens now? Why? Now, this has nothing to do with charts. This is all fundamentals. This is all fundamental. Yeah. Fundamental. It's not about being right. It's about being prepared. And if you're prepared and the market behaves the way you prepared, it's not that you're smarter or a better trader. You're just more confident to do what needs to be done because you think it's normal. It's not your brilliance, it's your knowledge. If you just know, then it's nothing complicated. It's just like, oh, well, that's quite factual. That is statistically correct. So I will trade that because it's probably something like that is going to happen, or at least that's reasonable thinking. And if something doesn't happen, if something different happens, you know that it's unusual. And you say, well, you know what? Something unusual is happening. I can't predict that. So give me my money. I'm out. Then you protect the cap. It's about being informed. You're never going to know everything, but you should know what's normal. Okay? Cool. Yeah. So what's going on for this acceleration? Well, that's a whole different kit and caboodle. The bond market's freaking out, you all. And the result of the global treasury market freaking out is this yen is very weak and this dollar is very weak. And you should know this and try to take advantage of this knowledge. So how do we know the dollar should be weak? Don't give me an opinion. Give me a way to measure that dollar weakness is why dollar is weak. How about that? Don't give me headlines. Let me just give you. I guess it's too hard for me to even frame the question. So let me just, right? Because again, if you know what's going on, then you know what to do, and you can go through a process of look at this, look at that, or look at this, don't look at that. For example, you could say, look at dollar pairs, look at yen pairs, look at Swissy pairs. But don't look at euro pairs, pound pairs, Aussie pairs, CAD pairs, and Kiwi pairs. You'll catch them inside here, but you have to know what to look at, what not look at. So how do you know all that? Well, we have that in like our fundamentals. So we can go to the COT, and again, I'm just going to give you facts here. Look, yen is weak. Look, dollar is weak. Done. In fact, over the last 7 days, money is definitely fleeing the US dollar right now. Definitely. Cool. Well, if money's fleeing, maybe that explains why it's weak. What's this? The entire yield curve in the United States Treasury market. 1 month, 3 month, 6 month, 1 year, 2 year, 5 year, 7 year, 10 year, 20 year, 30-year treasuries tracked over 7 days and tracked over 30 days, showing the flow week over week and the yield month over month, and comparing the two to show the change in the yield curve. And what is it? What do these red bars tell you? Okay. Money came out of the 1 year, 1 month. Money came out of the 3 month. Money came out of the 6 month. Money came out of the 1 year. 1.2% flow out. 1.4% flow out of the 2 year. 0.6 out of the 5. 0.2 out of the 7. 1.5 out of the 10. 1% flow out in 1 week out of the 20 year and 30 year money flow. So across the board, through all duration, money came out of the U.S. Treasury market. Yields compared to 30 days ago went up. So where did the money go? Well, if this were foreigners, let's just pretend they're French. And if foreigners, the French, were selling their treasury, they no longer have a piece of paper that says they own a treasury and they're going to get paid by the U.S. government. They've sold it to somebody else, converted it to dollars. Then they got their dollars, converted it into euros so that they can spend it in their country francs. Therefore, the dollar's weak. You can see it in the yield curve, and you can see it in the long-term capital stock and short-term capital flow of the dollar. Look at the week over week change. Starting last week, or let's say not starting, but definitely last week and for a while, institutional investors have been dumping the dollar. Oh, well, maybe you should be the dollar. Yeah. But they're also dumping the yen week over week and total stock. They're getting shorter and shorter and shorter and shorter and shorter Japanese yen, which means Aussie dollar up, Aussie yen up. And none of it is opinion. It's 100% deduced. Was that right, Wee? That's really interesting. I thought I had you fixed, so I apologize for that. But the fact that you can't type into the chat, which is part of the free service, is also an interesting glitch. So I'm working hard on it, man. I'm going to get on it, in fact, like right now. Okay, so let me wrap up here, guys. These things are moving, and it's logical. You should be able to see it and research it, understand it, prepare for it, and ideally trade along with it. It meaning fundamental bias and macroeconomics, but then along with that, have technical tools to help you identify entries and targets, which that's what TRADARS does. Yeah, super amazing game changer. And I think you're going to be able to make trades that last longer too, because you're going to have better data. So you're going to have more confidence to let your winners run and lower your risk. And that, I believe, is the secret sauce. Not making better trades or more trades. It's lowering your risk and letting your winners run. That's the ultimate goal. Make a living, lower your risk, and let your winners run. That's the secret sauce, ladies and gentlemen. But you can't do that without data. Otherwise, you're just guessing, or you're random, or even worse, you feel like it. Or in this case, in many of these scenarios, I would assume dollar should get strong. But I have the data to say, not this time, Wayne. Something else is happening. So then I go through the data. I'm like, oh, gosh, look at that. Now I understand. Where years ago, all I had was my experience. And I would say, well, normally I buy dollar this time of year. But I guess I'm not going to buy dollar this time of year. Instead, I can say, not only am I not going to buy dollar, I understand why dollar is weak. I understand why dollar is weak. I understand why dollar is weak. And that it's U.S. institutional investors and foreign institutional investors. And I can see them trade. And my goal isn't to be smarter. My goal is to trade along with them and to have it now visually to say, dude, sell yen, sell dollar. Some of that money going to Europe, maybe it is the French. But to just be able to see it and say, I understand, so now I'm going to make trading decisions. Otherwise, it's just chaos and noise. I prefer clarity and confidence. Peace on earth, YouTube. Oh, and what I was saying earlier is I'm going to try to take all of this and be able to give it to you to put on your MT4, MT5 through Traders Way. They're our execution partner. So that I can tie in, I can bridge in, or use various other technologies that we could kind of build this into like MT5. Yeah, wouldn't that just be killer? So now you're trading Aussie dollar, and you know the technicals, you know the fundamentals, you know the seasonality, the COT, and it's putting together and it's drawing my moving averages, and it's drawing the linear projections, and it's drawing the multi-time frame pivot points, and it's just putting it all together and then explaining everything. You know, Aiden could just have this whole section here written out, his argument for why this is up in plain English, not just numbers. And now you just decide, do you buy it? Well, that would be neato. That would be really neat. I hope you guys share my vision. So get that account, huh? Let's go.